Thanks for joining us at XM.com. In this video, we'll be looking at the upcoming week's events. I'm Christina Marujos, and with me is our senior market analyst, Achilleas Georgolopoulos. Achilleas, we had the Fed meeting a few days ago. The aftermath, of course, of that meeting is likely to reverberate into the upcoming week with a plethora of Fed speakers hitting the wires, as markets, of course, anticipate more information regarding future monetary policy. But after its initial slide, the dollar recouped its losses. So what's next for the greenback?
Hi, Christina. As you mentioned on Wednesday, the Fed announced a much discussed 25 basis points rate cut. While the Fed Chair Powell called it a risk management action, market expectations for 2 more rate cuts were supported by the famous dot plot. So not much has changed in terms of the Fed outlook since the meeting. Now, moving on to next week, the focus shifts to Fedspeak and, of course, data releases. The blackout period is over, so we expect a plethora of Fed members to be on the wires this week, with the focus mostly being on Waller and Bowman. Those two Dovish Fed members voted for a 25 basis points rate cut instead of 50 that most economists and investors were expecting. So it would be interesting to see their remarks about this action. Meanwhile, we have quite a few data this week. Final Q2 GDP print, preliminary PMIs, but I think investors' minds will be on the durable goods report on Thursday, which is usually treated as a leading indicator, but more importantly on the PC report on Friday. This is the Fed's preferred inflation metric, so it is a bit of a special release. Now, combination of Dovish Fed commentary and softer data, particularly on Friday, should dent the dollar's current beat, but of course support risk appetite.
And now let's turn to the trade front. US-China trade negotiations are back in the headlines, Achillea, as the two sides have reached an agreement on TikTok. However, other crucial topics remain unresolved. Where are we currently on the trade front?
Yes, you're absolutely right. China and the US continue to talk. There was another series of meetings in Madrid. There is a scheduled Trump-Xi call later today, more or less to seal the agreement about TikTok and, of course, the progress on other themes. Having said that, of course, the technology competition between countries, NVIDIA, for example, being in the spotlight, will continue. So we will continue to have ups and downs in this process, which probably is going to last for a while. Meanwhile, of course, China has its own issues. There is a yuan appreciation, which is slightly worrying from Chinese perspective. There was a PBOC meeting which didn't cut the 7-day repo, so it didn't follow the Fed. But this week or next week, there will be another LPR meeting where there is a small chance they might adjust the 1-year and 5-year rates, mostly to support their housing sector.
Now let's cross into Europe. The European Central Bank is pausing its easing cycle until further notice. So the upcoming PMI data will be rather important. But what will the data mean for the euro?
Yes, we know that the ECB is on hold. We got an upbeat tone at the recent ECB meeting. It would be interesting to see with that improvement in the growth outlook is confirmed by the OECD projections we get next week. In the meantime, we get the PMIs. They're very important for the euro area. Economists are looking for a modest improvement in the German numbers, but the big question mark are the French numbers. And we know what happens there in terms of the political turmoil and a new prime minister taking over, and the early October deadline for the budget. Therefore, if we get good data, which more or less is the expectation, then the euro might be inclined to rally. However, I think that the barriers for positive euro data pushing the euro higher against the dollar is very high at this stage. Therefore, movements in euro dollar will be driven by the US side.
I see. And finally, the Swiss National Bank is holding its quarterly policy meeting. And with rates currently at 0%, could we see the SNB cutting further into negative territory?
We had quite a few meetings this week, so that continues into next week. This week, of course, we had the rate cut from the Fed. We had a hawkish BOJ meeting earlier today, but of course the SNB has different issues on its mind. The SNB cut rates to 0 early this year because there is a deflation problem, and of course because the franc continues to appreciate against the dollar. A return to negative rates is not on the cards this week or the next meeting. However, there is an expectation that the SNB president Schlöger might keep the door open to such a move. Markets might take that as a credible threat, but most likely they will try and continue to test the SNB nerves and, of course, push dollar franc lower.
Achilles, thanks so much. This was The Week Ahead at xm.com.